Equalization payments have emerged as a source of provincial tension over the years because the system is complex and often misunderstood. The central idea behind the transfer payments program, officially known as Equalization and Territorial Formula Financing, is that all Canadians should be provided with reasonably comparable levels of public services at reasonably comparable levels of taxation. This is done through transferring federal funds to provincial governments that have weaker financial capabilities using a formula. The actual calculation for the payment is complex, but here's a simplified explanation. To start off, a fiscal capacity of every provincial government is calculated. This is the revenue each provincial government could raise on a per capita or per person basis through personal income tax, business tax, property tax, and sales tax when applying the national average tax rate. The justification for using the national average tax rate is that while some provinces have comparatively low taxes, they could raise more revenue if they chose to increase taxes. In addition to this, 50% of actual natural resource revenue is added to arrive at a province's total fiscal capacity. For example, here are the actual fiscal capacities used for the 2018-19 equalization payments. You'll see that the provinces with significant oil and gas production, namely BC, Alberta, Saskatchewan, and Newfoundland and Labrador, all have high fiscal capacities and are considered have provinces, which do not receive an equalization payment. The other provinces, Manitoba, Ontario, Quebec, New Brunswick, Nova Scotia, and Prince Edward Island, have low fiscal capacities and are all scheduled to receive equalization payments for the 2018-19 period. These fiscal capacities are then averaged over the 3 previous years. Second, a fiscal capacity cap is determined, which represents the highest amount of transfer payments per person a province can receive and is equal to the fiscal capacity of the lowest province not receiving a payment. The idea is that no province receiving an equalization payment should be better off than one not receiving a payment. Lastly, the total amount of equalization dollars to be distributed is determined as a set percentage of Canada's total GDP. In 2018-19, this total came to $18.9 billion. That equalization payment ensured that each provincial government has, at the very least, slightly more than $9,000 per person to spend on public services. The system has its share of misconceptions. The term transfer payment is somewhat misleading. Equalization payments are drawn from the Federal Reserve, which is financed through individual Canadians and Canadian businesses. Contrary to popular belief, this does not mean that the have provinces pay have-not provinces. Rather, the majority of equalization is paid for by wealthy individuals and thriving businesses in every province. While the system is branded in many different ways, ultimately it results in the redistribution of wealth across the provinces. Quebec often receives national scolding for the amount it receives from equalization, which many provinces view as unfair. In reality, Quebec received one of the lowest equalization payments on a per-person basis in the 2018-19 payment. The largest payment it received is almost entirely due to its population of 8.4 million people, which dwarfs the other provinces receiving equalization. PEI actually received the largest payment per person, yet the lump sum total was small due to its population of only 145,000 people. A common misconception about equalization is the effect of a province not having a provincial sales tax. As all fiscal capacity calculations for sales tax are estimated using national averages, not actual revenues, the formula implies every province has a PST, regardless of whether it actually does or not. This does, however, mean actual tax revenues are not truly reflected. Alberta's calculated fiscal capacity for equalization is higher than its actual provincial revenues, as a province does not have a PST. Its recent provincial deficit may have been partially or fully offset with the introduction of a provincial sales tax. A contentious issue with the formula is the way it treats government-owned hydroelectric companies. These organizations are exempt from corporate business tax and revenues are treated like natural resource revenues. However, unlike uranium, coal, lumber, or fossil fuels, which have commodity prices determined by the market, hydroelectric prices are determined by the government. Driven by electoral cycles, governments have elected to keep electricity prices artificially low. It is a quadruple win. Residents receive cheap electricity, politicians gain political capital, provincial hydro companies are exempt from corporate business tax, and their financial capacity is lowered, which increases the equalization payments they receive. Case in point, Quebec and Manitoba have some of the cheapest electricity in the country and are both receivers of equalization. If the formula used market prices for electricity instead of government-controlled prices and enforced a corporate tax, equalization payments for these provinces would be lessened. The overarching goal is to provide Canadians with comparable levels of public services across the country through provincial wealth redistribution. With this in mind, while there are some improvements to be made to the program, ultimately, it is a well-designed program for its purpose. Equalization is one way to ensure that Canadians have equal access to services. Recent deteriorations in interprovincial collaboration run against the heart of the equalization system, which is equity. In equalization, a rising tide lifts all ships. Many provinces which currently receive equalization payments have chosen not to develop industries and natural resources, and, as a result, receive larger equalization payments. This subsequently decreases the amount of equalization available to other provinces in need. Further to this, provincial governments have acted to limit the economic development of other provinces. Canadians should ask themselves whether equalization should take these sort of provincial actions into account when deciding on final equalization payments. And is limiting provincial development in the spirit of equalization or even of the federation?